Hello to everyone. Today I am here with time value of money lecture number 4. If you are interested to have update videos on banking and finance related topic, please do subscribe my channel. In the previous lecture, we have covered the present value of ordinary annuity and of annuity due by applying the formula for annuity. For ordinary annuity, formula is PVAN equal to PMT 1 minus 1 plus K power minus n divided by K. And for annuity due, the formula is PVAN equal to PMT 1 minus 1 plus K power minus n. And here we will have to multiply it by 1 plus K divided by K. Today we are going to calculate the annuity both for the case of ordinary annuity and annuity due. The formula for both cases is as follows. The formula for ordinary annuity is here. From this formula, we are going to develop the formula for PMT, that is annuity. You can also write here annuity. In case of annuity due, here we have the formula for present value annuity, and from this formula we have derived the formula for annuity due. You can write here, you can write annuity here. That will help you to memorize. Now we are going to calculate the annuity both for the annuity due or ordinary annuity. Here we have a problem. Mr. X avails car financing facility from bank on the following data and the term. First of all, the invoice value of the vehicle. It's equal to 3.2 million or 3,200,000. Mr. X contributes 30% of the invoice value. It comes 9,60,000. The net financing comes to 22,40,000. So that net financing is considered as present value annuity. NM, because M represents the periodic payment, if you are going to make it semi-annually or quarterly or monthly. Here the case is semi-annual equal installment. Payment term is semi-annual equal installment. So the N will be equal to, here you can write as N, will be equal to N multiplied by M. It comes to 3 multiplied by 2 equal to 6. Internal rate of return, that is K. If the payments are periodic, K will be divided by M. Here K is equal to 12% and M is equal to 2 because the payments are semi-annual. It comes to 0.06. Now we are going to calculate the semi-annual installments in arrears and in advance. First, we will calculate the installment in you can say arrears. Now the in arrears, ordinary annuity and end mode, they are interchangeable words. And secondly, in advance, annuity due or beginning mode, these are changeable words. What's given in the question? First of all, PVAMN, it is equal to 22,40,000. N is equal to 2 multiplied by 3 equals to 6, and K is equal to 0.12 divided by 2 equals to 0.06, and PMT is to calculate. Now we are going to calculate it first for the ordinary annuity and thereafter for annuity due. Here we have the formula for ordinary annuity, that is equal to PMT is equal to PVAMN multiplied by K divided by M. the whole value will be divided by 1 minus 1 plus k divided by m power mn. So here you put the value of PVAN, that is equal to 22 lakh 40,000. K is 0.12 divided by 2. Thereafter, these values will divided by 1 minus 1 plus k over m, that is 0.12 divided by 2, and power is minus 3 into 6. So after calculating we have the value equal to 4,55,593.22. It's the semi-annual installments to be paid at the end of 6 months for 3 years. Now we are going to calculate the NAT in case of NAT due. That is also called in advance or beginning mode. We have the formula for NAT due, that is equal to PMT is equal to PVAN, and you will also write here M multiply by K divided by M. The whole value will be divided by 1 minus 1 plus K divided by M power M minus Mn multiply by 1 plus K over M. After putting the values, the answer comes to 4,29,804.90. Now we are going to extend the same question. In the second question, the payment mode is quarterly. Other values are same, invoice value is same, contribution is same, net financing is same, period is same, but the payment term changes, it comes to quarterly. In case of a quarterly, the N is equal to 3 multiplied by 4. Here you can write N. And the internal rate of return, that will be equal to K over M. Here it's quarterly, it will be divided by 4 and the value comes to 0.03. Now we are going to calculate the quarterly installment. Quarterly installment in arrear and in advance. Now, first of all, we are going to calculate the value in arrear. That is the ordinary annuity. So we have the formula. Here we are going to put the values. The difference is here you will divide K by 4 and you will multiply by N by 4. So the value comes 2,25,050 rupees. So it's the quarterly installment to be paid off at the end of 3 months for 3 years. In case of our ordinary annuity, here you have the formula. Similarly, the answer comes to 2,80,495. It means it's the quarterly installment to be paid in the beginning of 3 months for 3 years. In the similar way, you can also calculate the installment for the monthly, that you can do it by yourself. Thank you very much. See you with the upcoming video on the same topic, that is time value of money.